Well, things, in my opinion, are really positive this morning. That's because why? Oh, things are going about as I expected. And I always like it when I'm right. Don't you? But like it when you're right. Anyway, the only negative news so far this morning, Tesla down a tad. But it's actually turning up right now. We'll see what it is when we get through the report this morning. But there's a ton of economic news today. A little bit of Tesla news, interesting news from Tesla. And overall, I would say the market's digesting the news very, very well. Again, I think it's pretty much in line with my expectations and maybe the market's expectations too. Let's take a look though. Let's start with the Tesla news. As always, first of all, we got Tesla's RoboTaxi app. This is Sawyer Merritt reporting. Tesla's RoboTaxi app is now available to all iOS users in the US. You can go over there on your Apple app store. You can download the Tesla RoboTaxi app, and then you can join the wait list so that when RoboTaxi comes to your neighborhood, or if you go to its neighborhood, you can get RoboTaxi access once it's available. Anyway, and Android's version is supposedly coming soon. Well, not supposedly, according to the reporting, is coming soon. Now, in the app, if your ride is taking place without a safety driver present in the driver's seat, then it is being conducted autonomously. By choosing the button below, you agree to Tesla's RoboTaxi terms of services, which I assume are some kind of legal mumbo jumbo. I haven't looked at it. You're acknowledging that you've read the RoboTaxi privacy notice and confirm that you're at least 18 years old. So nobody under 18 can ride in the autonomous vehicles. So this would be, quite the news. Now, yesterday there was a bunch of confusion about whether the Tesla safety riders are, as Brian White likes to call them, the Tesla safety hitchhikers, had moved over from the rider seat over the passenger seat, had switched back over into the driver's seat. Well, Tesla put out a statement. They said, look, safety monitors are in the driver's seat, but only if there's a highway trip. So they started doing highway trips. You realize, of course, none of the other services are allowed on the highways or go on the highways. When I say allowed, the other services do not go on highways. Local trips that don't use highways will continue to run with no one in the driver's seat, only in the rider's seat. There's no regulatory blockers. No, Tesla's perfectly capable under regulations in Texas of going onto the highways. Sawyer Merritt also reporting this. Tesla has announced that the lease prices for their Model 3 will be going up by $50 a month, and the Model Y will be going up by $80 a month starting September 21st. If you're thinking about getting a lease at these unbelievably low rates, you must order and apply for leasing before then, and that is that news. Now, nobody else is reporting this. This is Randy reporting this. I got together with Grok last night, and I was like, what's happening here? We are getting a shift in the marketplace. We are losing out in France and Germany and a couple of the other European countries. Everybody's reporting day after day, breathlessly reporting how horrible sales are in Europe. But so, this year, listen to this now, so far this year, number one, of course, after the United States is China. Then we get Turkey in second place with 8,730 cars in August. South Korea in third place with 7,974. We got Australia next with 3,155. Finally, you get a European country, Norway, with just under 3,000. We get Taiwan with 1,977. And then Spain with 1,435. Now, this morning, this was not part of my reporting last night, I was able to pick up the Times of London, who's reporting the official industry figures from the Society of Motor Manufacturers and Traders. This would be in England, shows that Tesla sales in August grew more than 7% in the UK to 3,243. Now that's down more than 5% year to date, but over year, up 7%. So now that you got to take that back up here, 3,243. That puts the United Kingdom just below South Korea and just above Australia. So the English-speaking countries are seemingly doing okay. It's those European non-English-speaking countries that are taking it to Elon. But things are changing over there, even in those countries, and this might be we might be seeing more changes now. This compared to last year. Last year, number 2 was the United Kingdom. The United Kingdom was comparatively speaking, it was running around 4,000 a month. Canada last year was in the list, no longer in the list at all. So there's one English-speaking country that's not doing very well. Australia was in the list last year with about 3,000 a month. Germany was also 3,000 a month. France was at 3,000 a month. Norway was at 2,000 a month. So you see a little bit of a shift, but these other countries are more than making up for those lost European sales. So anyway, we'll see how that all works out over time. So Wall Street, 24/7 Wall Street, they have a year-end price target right now for Tesla at 351.73, representing about 5% upside potential from here. Their forecast through the end of the decade is based on the company seeing projected revenue growth climb from 112 billion in 2025 to 297 billion in 2030. Now, that 112 billion is a high number for the end of this year, but they're maybe taking into consideration the things that we've been talking about here, which we might be talking about 1 million cars in the third and fourth quarter and substantial energy shipments in the third and fourth quarter. So they got it 112.9 billion in 2025, going to 297 by 2030. I think that'll be extremely low compared to what it really is. And then EPS growth from just under $2 in 2025 to 11.24 in 2030. So there you have what 24/7 Wall Street is saying. Again, I think that those numbers will turn out to be laughable, but they're certainly positive and good news of 5x growth between now and 2030 is not bad. This is Randy Kirk. Hit the like button, hit the subscribe button, hit all the buttons. Later on today, you're going to have Bradford Ferguson. You're going to have Cern Basher. I mean, how much better does it get than that? Keep watching us all the time. That's why you hit the notify button. For those of you who haven't figured it out yet, you cannot hit notify unless you are set up as a subscriber. Patreon. Nobody yet in September, not a single person has $3 a month or $5 a month or $10 a month. Now, I will admit, I'm a week behind on the book, but once we start selling the book, I will admit I will be making you an offer to join Patreon based on getting free copies of the audio version. So that'll be coming up later. As I have been predicting, because of net negative immigration, because of no federal government hiring, and because of a restrictive Fed, you're not going to get higher numbers than the numbers that we're getting from employment. Now, once the Fed lowers the rates, you're going to get some durables, and you're going to get some of the manufacturing can pick up. But right now, when you've got this restrictive Fed, nobody's going out and buying that fridge or that bicycle. The monthly numbers are likely to be under 100,000 the rest of this year into next year. I don't think even if the Fed lowers, they're not going to be over 100,000 on a regular basis again, because the Fed is not hiring and because you get net negative immigration. So the unemployment rate, however, will stay around 4%. This is what I've been saying now for how long? For a couple of months. Nobody believed me. I think I've been saying it longer than that. I think I've been saying it since the beginning of the year. Since Trump came in and said, okay, that's it on Fed hiring, and then started closing the border. Once those two things happened, I started reporting this. You can't have 150, 180,000 people a month being added to the labor force if the federal government isn't hiring anybody and if people are going home. to Mexico and all those other places. All right, CNBC says U.S. private sector hiring rose less than expected in August. Data released Thursday shows offering the latest indication of trouble in the labor market. It's not trouble in the labor market. It is natural. It's normal. It can't be otherwise. Private payrolls increased by just 54,000 in August, according to ADP. That's below the consensus forecast of 75,000. They didn't listen to me. I said it would be under 50,000. I said it might be 25,000. It might even be zero or negative. That was the estimate that was compiled by the economists that don't know what they're doing. You want to know what's going to happen? Listen here. The year started with strong job growth, but that momentum has been whipshawed by uncertainty, according to Nela Richardson. Anyway, ADP's chief economist. Richardson pointed to rising worries from consumers' labor shortages caused by what? Oh, yeah. And disruptions tied to artificial intelligence as potential drivers of this decrease in growth. Why doesn't she mention net negative immigration? Why doesn't she mention the federal government? Jobs tied, well, of course, this is not the federal government in this case, yeah. Jobs tied to trade, transportation, and utilities saw particular weakness. Trade, transportation, and utilities, with those groups losing 17,000 jobs total, see? Education and health services followed. They also declined. But those losses were offset in part by a boom in leisure and hospitality industry, added 50,000 jobs. We continue to have this divided economy with those over 100,000 doing great. They're not worried at all. People that are old like me and have got their millions, in their accounts and their real estate, et cetera. Those people are traveling. They're having a great time. They're spending money, and it isn't going to change. But the folks that are at in their 20s and 30s who are not creating families, they're not buying a sofa and a refrigerator because they're just moving into an apartment. Wage growth maintained the same pace in August. Those staying in their roles saw the pay rise 4.4% year over year. That's good. They saw their wages going up 4.4% year over year. That's about exactly, just a little, maybe a tad higher than the Fed would like to see it, but that's really close. And then those who changed their jobs saw a 7.1% increase over the same period. So this is good. These are people. See, this is showing that the labor market is not weak. What's weak is the input, the number of people available to go to work. In the week ending August 30th, the advance figure for seasonally adjusted initial claims was 237,000, an increase of 8,000, breathlessly, some of the headlines said, from the previous week's unrevised level of 229. The 4-week moving average was 231, an increase of 2,500 from the previous week. The advanced seasonally adjusted insured unemployment rate was 1.3%, as it has been since time immemorial, since time began, since as long as I can remember. The total number of continued weeks for claimed benefits in all programs was 1,966,000, was a decrease. This is what we're looking at, okay? This shows strength. Nobody else is reporting this. Go ahead, read all the articles and tell you how many people are now saying that we are seeing a decrease in the number of people that are having trouble finding a job. How many people are reporting that the dollar amounts that people are getting per hour is going up nicely and that real incomes are going up? Okay, then we've got non-farm business sector labor productivity increased by 3.3% in the second quarter. That is up from what was reported earlier. This is the second report on this. The U.S. Bureau of Labor Statistics reported output increased 4.4%, but hours worked increased 1.1%. And then labor productivity increased 1.5% in the second quarter. Unit labor costs in the non-farm business sector increased only 1% in the second quarter of 2025 because they had a 4.3% increase in hourly compensation, but a 3.3% increase in productivity. This is all good. BLS calculates unit labor costs. Let's see, increases in hourly compensation tend to increase unit labor costs, and increases in productivity tend to reduce them. Please listen. real hourly compensation, which takes into account consumer prices, increased 2.6% in the second quarter and increased 1.5% over the last 4 quarters. Well, that increase over the last 4 quarters is all about this year, not about last year. It's all about the new president. AFP. That's the resource. This is coming from AFP this morning. The U.S. trade deficit expanded more than expected in July. Government data showed Thursday on a surge in imports. Analysts expected was driven by a rush to beat another tariff wave because there's some of the tariffs that take place, I guess, next month. The overall U.S. trade deficit jumped 32% to $78.3 billion in July, according to the Department of Commerce. This came on the back of a 5.9% rise in imports to $358 billion, while exports edged up 0.3% to $280 billion. And then this economic activity in the services sector grew in August for the 3rd consecutive month, says the nation's purchasing and supply executives at the ISM. This, of course, is a survey. The services PMI indicated expansion of 50 at the services PMI indicated expansion at 52%. Okay, it's not percent really. Well, I guess it's above the 50% break-even point. So it's expanding, and it's the 13th time in 14 months that the services have been expanding. So PMI registered 52%, 1.9% ahead of, I just said that. The index has been in contraction. The new orders index also remained in expansion. The employment index was in contraction for the 3rd month in a row. Supplier deliveries index registered 53.3%, 0.7% below the 51% in July. The prices index registered 69.2, 0.7% point decrease from July's reading. The index has exceeded 60% for 9 straight months. The inventories index was in expansion territory. People building up inventory. We heard that. Now, this is on the services. Services don't carry a lot of inventory usually. The backlog of orders was in contraction for the 6th month in a row. So the backlogs are being filled. All right. So the PMI level showed greater strength driven by faster expansion rates in the business activity and new orders indexes. All right, then at the same time, as usual, coming out the same day, you've got that was the ISM, then you have the S&P. August data highlighted a rise in business activity across all 7 U.S. sectors monitored by the survey, up from 5 of the sectors in July. So across the board, everything going up. The basic materials and healthcare sectors return to growth. They have been down. Financials are now at the top of the output growth rankings. Who's saying that? Tom Lee. Business activity increased in the latest pace in 2020 at the fastest pace in 2025 so far. Are you hearing all of this? Consumer goods was the outperforming sector in August. Everything is up. Basic materials posted a rise in output for the first time since February. Consumer services was the slowest growing sector. It was the first time since January the consumer services is underperforming the rest of the sectors. Gosh, guys, didn't that sound like a good report? Did that sound like we're back on the track to the golden age? I think everything is doing exactly as I have expected it would do. I think we're going to be going into a very strong 4th quarter as a bunch of stuff that's happening out there is going to start to all come together in the 4th quarter. We've got S&P, we've got the trueflation numbers all under 2. The CPI numbers are 1.98 for the overnight, 1.92 year over year. The PCE number is still above 2, but 2.25. You've got the President of the United States at a 48% approval rating, and you have got the GDP tracker at 3.0. We'll have a new number tomorrow on that one. Okay, so what is happening with the market this morning? Well, Tesla has been playing around with whether it wants to be in the red or the green. Right now, it is down an entire 0.03%, but it looks like it's just a minute ago, it was green. So if I'd reported it just a few seconds earlier, it was above the line. We've got the Dow, which was down all morning, is finally up 0.15, just barely above the line. NASDAQ just barely above the line, up to 0.22. S&P up 0.22, also just barely above the line. So it's all just playing right around, right at break even today. Of course, they're wanting to know what's going to happen with those job numbers tomorrow. Are they going to be better than these ADP numbers? No, they're not. They're going to be like these ADP numbers. Count on it, because what are we going to be adding? Well, again, the ADP numbers are not really very predictive of the overall labor numbers, but the labor numbers tomorrow will not be great. Oh, Tesla just went positive, 0.05. There you go. See? All right, we've got the Magnificent Seven, mostly green, but very close to, again, Google down 1.45, Amazon up 3.12, Meta up 1.86. Those are good numbers. Okay, Cathie Woods are mostly down, even though bonds are doing great. So this morning, it's not working. So let's go ahead and look at those bonds. We'll try. Something wrong with my machine here. Okay, down 1 basis point. It was better than that earlier. So we're back to 4.2. It was under 4. It was at 4.19 earlier, and it's also still headed down. So getting some profit taking this morning on those bonds. But 4.2, I'm gonna accept that right now. You've got oil down 68 cents, 63.29. Natural gas unchanged this morning, right where it's been, 306. Gold finally down $38.90 at 35.96. That's still a huge number. And silver down 2% at $40.81. Copper down 1.27% at back down to around 452. The dollar is about the same. It's mixed. Bitcoin down 1,860. It was down more earlier. We're at 110,163. All right. So as I've repeatedly said this morning, what a good morning. Excellent morning, even though you want to see Tesla up 3, 4, 5%. But, maybe later today. We'll see what happens. I mean, it's really good news that the app is out. It's really good news from yesterday. We were reporting last night that Tesla is, probably going to be building Cybercabs in both Austin and Fremont based on activity around those two factories. That's very, very good news. I would say everything's pointing towards a soon release of RoboTaxi without any safety rider, and with lots and lots of people getting to use it, and with more and more cars on the road, and more the increase of the geofence, not only in Austin, but elsewhere. So we'll see what happens, but all of that looks positive to me, and it's just a matter of which day does the market decide that it's time to goose the golden goose and see it go up. All right, later on today, Bradford Ferguson around 5:15 California time, and Cern Basher around 7:45 California time. And that's all I've got. Oh, no, last night it was Brian Wong. We did a report, and I think there was a lot of good stuff in that Brian Wong report that you may want to go back and check out. I'll put the card up right here. Okay, that's it for now. It's been great talking to you.